And away we go. My name is Rob Booker. Welcome to this webinar presentation, How to Make Money by Losing Money. Today's presentation involves no sales pitch. There's no offer at the end. I'm not here to ask. I do sell things. Today's presentation is not about that. I do make money from trading and I do make money from education. In the last 15 years, I've made about $6 million trading, primarily currency, and have made about the same amount of money in trading related education, with the bulk of that trading related education money coming in the last few years, as I've been in the business so long that I have a lot of subscribers. I have a lot of people that know me, and the podcast helped out a lot. And I do enjoy making money. But in order to make money, I had to lose a lot of money at the beginning. And many of you know exactly what I'm talking about. And in this short presentation, in this webinar, I want to talk about a 3-step trading method. And I mentioned, and I'll say it again, there's nothing for sale. I'm not afraid to sell to you. You do get emails from me from time to time that ask you to buy something, and I always offer a super high quality product, maybe the best there is out there. But tonight, that's not what this is about. I just want to I want to talk through a theory about trading, and I want to talk through a method about trading. And I care about you. I care about how you're doing. I know that sounds weird, but I care about each one of you. Esteban and FX Hunter and Eric. I know Eric. Nice to see you, Eric. We've been through a lot, some of us. Some of you I know very well, and some of you I'm meeting for the first time. If you have a question about this presentation, you can reach me by text message at the number you see on the screen right now, 304 281 8332. You could use WhatsApp if you live outside the United States. You can even send me a question during the presentation. I'm not sure I'll see it during the presentation, but not far or long after we finish, I'll get your message and say hello. So I want to reach out to you. I don't look at the questions in the webinar chat window as much anymore because it just distracts me. And then we get off on a tangent. And I have a very specific, tight message to bring to you today in this presentation. I'm very grateful that you're here. One of you postponed your guitar lesson to be here. Thank you so much. All right, let's get this on the road. We're bursting the webinar software here. It's time to go. Remember that trading involves substantial risk of loss and is not suitable for everyone. You can, in some cases, when trading currency, lose more than you've deposited in your account. And sometimes your broker is trading against you. And sometimes traders treat investments like gamblers. I know that's not you and that's not your situation right now, and we certainly don't endorse that kind of behavior, but it does happen, and I just want to remind you that trading is risky, and past performance is no indication or promise of future results, and nothing that I say here in this presentation is intended to be a promise that you're going to make money. In fact, most people lose money trading, and that's because they trade irresponsibly with large trade sizes, they trade too frequently, they trade on short-term charts, and they trade financial instruments that are designed specifically to take money out of their pockets, specifically options. I mentioned this recently the other day, and someone got really upset. I said, I've never met an options trader who traded for a living who also showed me their account statement. Never seen it. Never saw it before. So just thought sometimes we want to trade something and we're not very good at it. That happened with me trading the Japanese yen for many years. I wanted to trade it, but I wasn't very good. Some of you have heard the phrase, it takes money to make money. I think Genghis Khan said that first. That's not actually true. But I remember my parents telling me that one time. And they were kind of explaining why at one point in time in our lives we didn't have very much money. That it took money to make money. Clearly you need trading capital in order to begin a trading account. This is more true than traders realize, and it's true in different ways than traders even think about. And tonight I want to talk about not just philosophy or psychology, or I'm not trying to unscramble your scrambled trading brain, but I want to talk about a strategy that from the very beginning promises that you're going to lose money, but in the end, you'll make more money than you lose. So let's take a look at a chart. And I want to ask you this deep question. Where's the best place to sell on this chart? So if you're looking at the screen right now, which most of you are, or watching the presentation in your own mind, you don't need to answer if you're watching the webinar. You don't need to answer. It's not a big deal if you don't. This is the US dollar Mexican peso, but it could be Amazon or whatever else. Where's the best place to sell on this chart? Well, clearly up at the top. I mean, if you could do it, if you had the courage to do it, that would be on this chart the best place that you could sell. And then the trend became obvious only later. The trend certainly wasn't obvious at this time. This is a 60-minute chart. And for the record, if you look at the daily chart, this downward move happened in the midst of a giant upward swing over a long period of time. The best place to take a sell trade on this chart was at the top in that red circle. It's pretty clear. You would have made more money by selling at that level than at any other level. No question. But where do most people start selling? Well, down here. Down in this area, after it's already started to move. I've been in this business for 15 years. I worked at a broker. When I worked at a broker, I was working for the third largest currency broker in the world, and I had access to every trade, every order that came through the system. Now, I couldn't see names of customers. I guess I could if I wanted to, but I didn't. I had access to look at all of the order flow. The heaviest selling came at times like this, after it had already become abundantly clear that the trend was lower. Other times that selling became intense was when price was moving upward. So as price began to move upward here, there would be a lot of people selling. But not over here. Not over there. Not a lot of selling up there. Most people had been stopped out already. They were done. They'd lost all their money trying to sell it by the time that it peaked. By the time it reached a top, they were done. They'd given up. In fact, some of them had already started to buy. And then they continued to buy all the way down. And they only began to sell down here in this area. And the reason they began to sell in this area was because their buy trades were stopping out. And a stop out of a buy trade is a sell trade. That's where the selling comes from over here. And then the selling comes in over here because they got burned buying and now they're selling. And it's an endless cycle for 90% of traders, 70% of traders, an endless cycle of doing exactly the wrong thing at exactly the wrong time. And all of these people call themselves trend traders or counter trend traders, flow traders, indicator traders, price action traders, divergence traders, smoke a bowl and take a trade traders, doesn't matter. It hits all traders of all stripes, all shapes, all sizes, all creeds and colors do the same damn thing. They sell when they should be buying, and they buy when they should be selling. But nobody knows. Nobody really knows. If they all knew, if it was so easy to find out where you should buy and sell, they would do it. People start to sell down here because they're stopping out of trades. Stop out of the trade. And then they start selling here. They're like, oh, I'm going to sell it on a retracement because now the trend is down. I'm going to sell it on a retracement. And if you're looking at this chart and you say, well, I wouldn't do that. I know you wouldn't. You're smarter than the average bear. I'm talking about the average trader does exactly this. In the last 15 years, I have personally shaken hands with about 10,000 traders. I probably know 3,000 of them by name still to this day, and 1,400 of them are members of my membership website. And every day I talk to about 300 of them inside the chat room. And additionally, I get text messages 50 to 100 times a day from traders all around the world, plus emails, plus Twitter messages, plus messages on a bunch of Facebook pages. I get a lot of information from traders. I talk to a lot of traders, and I love it. Most traders are selling right here, thinking that they're selling on a retracement with the trend, and then they hold on to that, and they get burned in the opposite direction. And they're obsessed with this question: what's the trend? They read Michael Covell's book, or they listened to Michael Covell's podcast, or they read Curtis Faith's book, or they read about the turtles. And the turtles were trend traders, and they're going to be trend traders too, and trend traders are the only ones that make money. But one person's trend is another person's counter trend. Buying on one time frame chart looks like it's with the trend, but on a different time frame chart, it's against the trend. And for some reason, the trend is your friend until the end, in which case it's no longer your friend. And these obsessions with finding out the trend and then trading with it can lead to disastrous results. The problem isn't that you can't identify a trend. The problem isn't that you don't know the entry. The problem isn't that you lack the best indicator. The problem isn't that you don't have the best robot. It's not a problem that you don't have enough money in your account. The problem with too many traders is that they're afraid to trade. For some reason, in the midst of an obvious move, traders are afraid to go with the flow. Now, I'm sure that probably doesn't include you, but it includes me. I still fight this. Here are some things that I hear traders say, or their actions tell me what they're thinking. You go first. Well, that's your fault because you told me it was going to be a good trade. Well, I don't want to look dumb. And that's that voice inside. If I take this trade right now, I'm going to look dumb. Today, I sold the Mexican peso, the dollar Mexican peso. It immediately went against me, and I looked kind of silly. Stopped out, lost $17 on a trade that could have made me $200. Not a big deal. If you ever think of these things, and I do all the time, you go first, it's your fault, I don't want to look dumb, then you're too afraid to trade. And that's a problem. Being afraid. It causes all kinds of complications. Everyone is so hyper-focused on the entry that they miss the big opportunities. So let's ask again. Where's the best place to sell on this chart? Well, initially, it's right up here. But the truth of the matter is, it doesn't really matter. It doesn't really make a difference. I mean, maybe in hindsight, this is a better place. But unless you're getting tomorrow's newspaper today, starring Kyle Chandler, Friday Night Lights, an old show called Daily Edition, where this guy got tomorrow's paper today. Unless you're that guy with a time machine, selling here is at best a 50-50 proposition. At worst, you're going to be right 10% of the time. And at very worst, you're going to lose all your money trying to get a perfect entry. In reality, it doesn't really matter where you sell as long as you follow a few rules. And as long as you look for a certain set of circumstances. As long as you stop thinking about where's the best place to sell and you start thinking about what am I going to do if it goes wrong and how am I going to deal with it when the shiz hits the fan, until you do those things, nothing else really matters. And until your focus comes off of the entry and being right and getting a perfect fill and all that stuff, nothing's ever going to change. The best place, in fact, to enter a trend trade, a big trend trade, is before anyone knows it's going to be a trend. And you know what the problem with that sentence is? How the hell are you going to be the one person that knows that? How are you going to be that person? Seriously, that's deranged, right? That's crazy. Crazy. That's the stupidest thing I ever heard, right? How about a spicy meatball? I don't know why I'm talking like that. I'm going to Rome, Italy on Sunday with my trading money. And I'm excited to go to Rome because I speak Italian and I haven't been back in a long time. But I digress. Where's the best place to enter a trade? A big one? It's before anyone knows it's going to be a trend. Well, how the fudge muffin are you going to know that? Wait a friggin' minute. So here's my answer. Because we don't really know that, the first step here, the real first step, is to stop obsessing about being right and avoiding embarrassment and pick a damn direction. All right? Just who cares? Say, I'm gonna buy or I'm gonna sell Amazon. Nobody cares which it is. Stop trying to pick a direction that's gonna be the right one. Doesn't matter. I'm gonna show you a way to work yourself into a profitable trade. Stop obsessing about it. Let's go through 3 steps. The first step is to wait for a financial instrument to reach an extraordinary extreme. Maybe a currency pair after news, the US dollar, Japanese yen, anytime, since it just keeps going up. And I'm going to show you a way to find an extreme. Here's a way to find an extreme, and it's free. Some of you already know this, and some of you are here for the first time. So let me pull up the old Google. Come on, Google now. Here we are. This is Google. I'm now going to show my screen. And here we are on my screen. Here's what I want you to type into Google. Knoxville Divergence Indicator. Free. And that will take you to get the Knoxville Divergence Indicator on TFL 365. That'll take you to a page that looks like this. You can use that page. And it's pretty easy. You can always scroll down to Kajabi Next, the Rob Booker Trifecta Indicator Package. And this is beautiful. It's a free course. You get a ton of indicators. Divergence indicator, missed pivots, intraday pivots, grab candles, Murray Math. And you get them for a variety of charting platforms. TradeStation, FXCM, MetaTrader, NinjaTrader. I don't remember. Doesn't matter. eSignal. Bunch of them. And they're free. So you just go to the web and you search for Knoxville Divergence Kajabi Next. And you just Google that and you're gonna enroll in that class and you're gonna download those indicators. And those indicators are going to show you something that is absolutely delightful. And here we go. Let's see if I can pull up a tradingview.com chart without too much trouble. Looks like TradingView. When I have those browsers open for a long time, they get a little sad. Okay, here we go. Nice. All right, so once you get your Knoxville Divergence Indicator all set up, we're going to look at a 4-hour chart here. And we're going to look at something like US dollar, Mexican peso. Doesn't really matter what you look at. Oh, how lovely. Oh, so lovely. I'm going to remove everything unnecessary from this chart. All the pivots and the ghost pivots. I'm just going to look at price and the Knoxville Divergence Indicator. I'm going to share with you what this is made from. And I'm going to share with you a simple 3-step strategy. Divergence. This divergence suggests that price has traveled very far and very fast, and it's no longer able to keep going. Let me show you how that is made. Knoxville divergence is a combination, or a combinación, as they say in some language somewhere, combination of momentum and RSI. When momentum is going down, but price is going up, that's divergence. And if during that same time the relative strength index was overbought, then we have Knoxville divergence. That means that price has traveled higher, but the momentum with which it's done so is less, and it's reached an overbought or oversold level. You can get bearish Knoxville divergence, and you can get bullish Knoxville divergence. What Knoxville divergence will show you is a theoretical, possible extreme. I'm looking for a Knoxville divergence line underneath the candles here. This is the US dollar Mexican peso, so it's a little bit tricky. Oh, it's a lot trickier. There's one underneath right there. This means that price traveled lower, but momentum was going higher, and the relative strength index was oversold. Simple as that. Knoxville divergence, and we'll go back to the slides. Knoxville divergence, there's some lessons on it inside of that Kajabi Next course. Knoxville divergence suggests a reversal is coming. It's loverly. Loverly. It's beautiful. It suggests that reversal that we just talked about is coming. It doesn't promise it, but it suggests it. The second step is to, once you see that divergence, take a trade with a really small trade size. Just take it. So if we go back to our chart here, this is so awesome. So we would just buy it over here as soon as we see that divergence. We would buy the US dollar Mexican peso. That's what we would do. 4-hour chart, we saw divergence, we'd buy it. We would buy that sucker. Super small position. Super tiny position to start with. One mini lot on a $10,000 account. The third step is to stop out fast if it goes wrong, or add to it if it goes in your favor, or trade a super small trade size and just let it work out over time. Remember when I said it takes money to make money? And sometimes you can make money by losing money? Look what happens if you just allow a small trade to work itself out. You buy here, it goes against you, goes against you, goes against you, goes in your favor a little bit. You're all excited, goes against you, and you poop in your pants or something. And all this time, every other jerkhole in the world of trading is panicking, 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 looking for a perfect entry, doing a webinar, selling some expensive crap to people to try to convince them that they can avoid this, or that this won't happen to you if you use my special magic indicator that costs $12 bajillion. It's all just BS. Meanwhile, you're just sitting on your trade because it was so small it doesn't matter that it went against you. One mini lot on a $10,000 account, it's not going to cause you any problem at all. It's never going to margin call your account. It's never going to matter. Oh, and then later one day, one time, it starts to move in your favor. It starts to just go. And it's beautiful. It starts to move in your favor, and it's just a lovely situation. Every single time it breaks through a new resistance level, you add a new trade. You keep adding to your trade. And because you picked a direction, you don't worry that there are divergences in the opposite direction. You picked a buy trade. You're going to ignore the sell trades. You're just going to ignore them, and you're going to hold on. And you're going to add a little bit to your trade as it goes in your favor, and you're going to always, always, always place your stop loss at the place where you basically had your last trade. And you can look up on the web trailing stops. You can just give yourself a little education on trailing stops, and there are no perfect ones, but I would say on most currency pairs, a trailing stop of 20 to 30 to 40 pips on most majors, and 200 to 300 on the exotics are perfect. And then stocks are going to have their own special rules for trailing stops. But you ignore the divergences in the opposite direction because, what did I say? There's no magic indicator. And the divergence just suggests a reversal is coming. And instead of obsessing on the entry and getting just crazy obsessed about being right and crazy worried when you see divergences in the opposite direction, you don't worry about it. So let's go back through the steps. Let's talk about how to do them. The first thing is Knoxville divergence suggests a reversal is coming. You can get Knoxville divergence by Googling Knoxville divergence Kajabi next. You'll get the downloads for your charting platform, and you'll get instructions on setting them up, and you'll be good to go. The second step is to take a trade when you see that divergence, and I would recommend using the 4-hour chart to be completely clear. Go long term, super small trade size. Stop out fast if you just absolutely need to. Stop out fast if it goes wrong, or trade a super small trade size, let it go against you, and let it work out over time. We call this rollover trading in our family of 1,400 traders from around the world. And then you add to it if it goes in your favor. This method's going to infuriate you. You're going to feel like your heart's going to go under your throat if you stop out 5 times because you're stopping out quickly. And you're also going to become upset sometimes when it goes against you and you have to wait for it to come back. But when you win big. And when you lose a small amount and it's no big deal. So I call it the no big deal method of trading. You allow yourself to lose money in order to make money. That's it. I'm going to look at a few examples with you right now. Okay, so here's the US dollar Mexican peso. Oh, check it out. Knoxville divergence. Right here. So what would this be? This would be a sell trade. 4-hour US dollar Mexican peso chart, a sell trade. Now I might trade one mini lot on a $10,000 account, and if it goes in my favor and it starts breaking through levels of support, that's magical. We don't have time tonight to teach you how to look at support and resistance. Lucky enough for you, there are 12 billion videos on YouTube about support and resistance. But you could just, every time it breaks through support, you just keep selling it. You could put an initial stop loss right above this level, and then it can stop out if it goes against you and you lose like nothing. But if it goes in your favor, you make a really healthy profit. Or you could sell one mini lot in a $10,000 account and you just let it ride against you a bit. It might infuriate you, it might scare you, but it's not going to margin call you. And meanwhile, everyone else is margin calling. Everyone else is blowing up their account. Everyone else is panicking. Everyone else is staying awake at night like a zombie trader, sad and confused and angry and hurt and lonely. But not you. Definitely not you. Because you knew what to do. So where can you get these indicators and how can you get started? Once again, I'm going to tell you one more time. You can Google Knoxville divergence Kajabi, and that'll get you in there. Google those words, and you can download those indicators for your charts. Or you can go to tradingview.com, right-click, choose Insert Indicator, scroll to the bottom on the left side and choose Rob Booker, and you can get my indicators on the tradingview.com platform. So let's take a look at the chart here, since GoToWebinar on the Mac sometimes gives you a little bit of a problem. I've unshared and reshared my screen, so now you're looking at my screen. I got to remember that I got to share twice on the Mac. Sometimes it just doesn't share. So let's walk through that once again. Here we are in the US dollar Mexican peso. I'm going to grab this chart so that when I process this webinar, I can show that. So we've got bearish divergence right here. That suggests, not promises, it suggests that a sell trade is coming up. And if we sell here, and it goes against us, we could either stop out immediately above the highs, or we could simply hold on and let it work itself out, which might take some time, but it's going to be a lot better than chasing after a perfect entry. Way better than chasing after a perfect entry. And that's it. On a 4-hour chart on any financial instrument, gold, S&P, Amazon, Google, Apple, Tesla, dollar Mexican peso. Big stuff going on. Thank you so much for being here, everyone. Sorry that occasionally the webinar software is a little shaky. I'm a little shaky there, and I didn't share the screen exactly on time. But thank you for being here. I've really enjoyed spending some time with you on this Thursday, and I'm very excited to hear what you have to say. Remember, stay in touch with me. You got a question, you can text me your question on WhatsApp or your text message program at 304-281-8332. Don't call me. I won't answer the phone. Thanks for being here, everybody. Have a wonderful day. Bye for now.